Hey guys, welcome to another Life Success Factors video. Thanks for joining me today. In this video, I'll be talking about how you can get started investing in the stock market. If you're new to the channel, I'd appreciate if you can hit the subscribe button below and the bell icon to be notified of new content as I release it. If you did like this video, I'd appreciate if you like it and also leave a comment below to let me know what you thought. Okay guys, so let's get into today's content. So today I'll be talking about how you can get started investing in the stock market in Australia. Okay, I'll be covering three main themes. The first theme is the mindset that you need to develop to actually get started investing. And this is so important. Before we go any further, I will say that I'm not your licensed financial advisor, and I do suggest that you seek professional advice before acting on any information. The information that I provide here is my own personal experience, but it might give you something to think about when you do go see your not licensed financial professional. So the second thing that we'll talk about today is how you can identify your investment goals. All right, it's always important to have an end goal in mind whenever you invest, and that goes for any area of your life. And then finally, we'll focus on how you can actually make your first investment. So we'll look at things such as online brokers, and we can even have a look at some potential stocks that you might want to do your own research on. So let's begin by talking about mindset. Now, mindset is so important when you're investing in stocks, because if you don't have the right mindset, this can significantly affect the decisions that you make, and also it could hamper your final investment returns. You've got to remember that when you invest in anything, this includes stocks, that you've got to take a very long-term horizon. It's not a rich quick scheme. So I'd encourage you to start adopting the right mindset. Now, the type of mindset you want to adopt is a growth mindset. And this is very different to a fixed mindset. Basically, people who have a fixed mindset think that no matter how intelligent or how knowledgeable they are, they can't influence an outcome. And this comes at the expense of them being able to influence the outcome of anything. So this is not the mindset that you should adopt when you invest in stocks or anything for that matter. You want to adopt a growth mindset. And a growth mindset will actually enable you to use the knowledge, use all the research that you've done to make the right investment decisions for you. So I'd encourage you to think about adopting a growth mindset, because that's the thing that's going to help you along your investment journey. Now, I'll say this again: when you invest, there is the chance that you may lose some or all of your investment principal. Now, this is important to keep in mind, because you've got to think about the type of investor you are. And if the thought of losing your investment principal scares you, or you're not in a financial position where you can make a targeted investment decision, then I'd strongly ask you to reconsider whether investing is right for you at this point in time. As always, please speak to your licensed financial or legal professional to explore your options further. Okay guys, so the second point that we're going to talk about today is how you can identify your investment goals. Okay, so we talked about mindset. Now let's talk about the sort of investment goals that you need to be setting for yourself. Setting an investment goal is really important, because you need to understand why you're investing. You need to know what the end goal looks like for you. Now, for me personally, I use investing to build my wealth, and I treat it as a long-term endeavor, and encourage you to start thinking about what investing means for you and what you will use investing for to achieve the goals that you set for yourself in your life. Maybe you are looking to also grow your wealth through investing. Maybe you're looking to invest to give you a passive income. Maybe you're looking to invest to leave a legacy for your kids or for your grandchildren. Whatever that is, I want you guys to think about that and use that to frame how you will actually go about making investments, whether that's in stocks or anything, real estate, etc. So as I said before, I use investing to grow my wealth, but I don't expect that to happen overnight. In fact, it could take many decades, and it's important to keep that in mind, because it'll allow you to frame your decisions in such a way that you take a longer term view and you're not put off by short term movements in the value of your investments. Now, if you look, 10 years ago, we had the GFC, the global financial crisis, and we saw a lot of asset values tank, and that scared a lot of people out of the market. Now, granted, everyone's got a different investment time horizon, so I'd encourage you to start thinking about, well, what is your tolerance for risk? Because that'll really shape the investment choices that you make. Okay, guys, now that we've talked about your mindset and also how you can set your investment goals, it's time to start thinking about how you can actually make your first trade. Now, the first stock exchange in Australia was actually established over 150 years ago in Melbourne, and things have come a long way. In the past, you've had to to purchase shares, you actually had to physically purchase them through a stock exchange. But things have changed, and now you can do a lot of your share trading online through what's known as an online broker. An online broker will basically connect you with a stock exchange. Now, when you're deciding on the right online broker for you, there are a lot out there, and it's important to be informed about the one that'll match your needs. I use a website called CanStar to start my research because this aggregates the number of brokers out there and ranks them based on their features. Now, I will say that CanStar does get paid by some of the brokers on there to have them featured, and so there might be an element of bias there, but it's useful to use the website as a bit of a starting point to start thinking about and comparing the different features available from your online brokers.
Okay, so we're on the CanStar website, and I've essentially gone to the online share trading section of the website, and I've told CanStar that I'm looking at brokers, online brokers, and I will make an average of 2 trades a month. Now, guys, this may differ for you, so I'd encourage you to have a play around and, depending on your personal circumstances, change that number. So we can see here that automatically the website has ranked different companies by their star rating, and the star rating is basically CanStar's own rating, and they've got a bit of a methodology that they've developed to rank them. And the things that they look at are the fees that the broker charges per trade, any ongoing fees, whether they offer chess sponsorship, and so on, and also ease of use. And you can see here that they've basically ranked the different brokers. I personally use CommSec because I've got accounts with the Commonwealth Bank, and it's just more easily integrates with my online banking. But CommSec may not be the right choice for you. Maybe you bank with NAB, and in that case, NAB Trade might be a viable option because of the ease of use. Now, each online broker will have their own interface, so we'll get some getting used to, and we won't have time to go over that in this video, but perhaps in a future video I can take you through the different interfaces available. So you can essentially click on some of these links, and we'll give you some more information about the different brokers. Over here, for example, I've just clicked on CommSec, and CanStar has given CommSec a rating of 5 stars across a number of dimensions. So it's given it a tick for trade with live prices, buy and sell signals, providing a daily market report, company financial reports, access via the internet, access via phone, email support, and so on. So I'd encourage you to have a look at the different online brokers and maybe explore some of the features and the reasons for why CanStar has given them a rating. Over here, I've just clicked into the CMC Markets page. And CMC Markets is one of those online brokers that offer quite low brokerage fees. We can see here that they only charge $9.90 per trade. I believe that's capped at a certain dollar value for the transaction. but we might need to just explore that further. So depending on the trade size, you pay different amounts for the brokerage. So if you're investing up to $5,000, then with CMC Markets, you'd be paying $9.90. And that's compared to CommSec. If you purchase shares online through their online portal, you'll pay $19.95. And that's largely the same for CommSec, all the way up to $10,000. And then you'll start paying progressively more depending on your trade size. You can see here CMC Markets is a little bit lower, but there are differences, guys, and brokerage fees aren't the only way to evaluate online brokers. So I'd encourage you to just have a look at the different brokers, at the different brokerage websites, and compare the features. Okay, guys, so we've talked about the different online brokers. Let's actually have a look at some of the top ASX 200 companies. Now, the ASX 200 is basically the top 200 companies by market capitalization on the Australian Stock Exchange. It's actually managed by Standard & Poor's. And basically what Standard & Poor's does is it compiles every quarter a list of the 200 largest companies by market capitalization, and it produces this particular index. Now I've gone to marketindex.com.au and I'm having a look at the ASX 200 index. And you can see here the index basically tracks how this basket of 200 shares have done in the aggregate over this particular trading day. If I change this to a month, you can see how the index has performed over the last month. And this is December 2019, where it is currently the 2nd of January 2020. So we can see over the month of December 2019 that the index has fluctuated between about 6,650 points and 6,850 points. If we stretch that out to the last 5 years, we can see that the index has fluctuated anywhere from about 5,000 points all the way up to 6,800 points. And over the last 10 years, obviously going back all the way to just after the GFC, we can see that the stock market, or the ASX 200, which is a relatively decent proxy of the entire Australian stock market, we can see how it's progressively improved. There have been some low points depending on different macroeconomic events, but the index has generally trended upwards. Now, I will say that past performance is not an indication of future performance. So what happens in the future? Well, I wish I knew, but no one really knows. And there's every chance that this graph could trend down that way, or it could go up the other way. And that's the element of risk that you always deal with investing. If we go down the page, we can see how some of the other indexes, as well as other asset classes, how they're performing. One index that gets quoted quite often in the evening news is the Dow Jones Industrial Average, and it's basically a combination of the largest industrial companies in America. And we can see that compared to 31st of December 2019, the index has improved by about 76 points. I actually don't think that the Americans have traded since the 31st. So we can see here that the Dow Jones, as at 31st of December, it had so we can see here with the Dow Jones that on the 31st of December 2019, the index had moved 76 points, or about 0.25%, as compared to the previous trading day. You'll also see that the price of gold is provided here, as well as the price of crude oil, and the value of the US dollar. And I think this is most likely compared to the AUD. Now let's quickly scroll down to the list of ASX 200 stocks. We can see the list here, and I think it's sorted alphabetically. As we scroll down the list, we can see some familiar names: Coles Group, CBA, Flight Centre, Fortescue Metals Group, which are basically a iron ore producer, Harvey Norman, JB Hi-Fi, Nine Entertainment. So basically, as I said before, guys, the ASX 200 is the largest 200 companies on the ASX by market capitalization. And if you don't know what market capitalization is, it's essentially the value of the company attributable to equity investors. So equity is just another word for stock or stock market. And what I like to do is I like to sort by market cap in decreasing order. We can see here the largest company on the ASX by market capitalization is the Commonwealth Bank, with a market capitalization of approximately $141.5 billion. And the next largest company there is CSL, with a market cap of approximately $125 billion. So these are very large companies, guys. And as we scroll down, you can see that the value of these companies quickly drop off. So as we get down to Macquarie Group and Wesfarmers, we're getting down to about the $50 billion mark. And these companies are progressively smaller in terms of market cap. And if we go all the way down to the end of the list, I think the company with the lowest value by market capitalization is Estia Health. So this table also provides you with a number of other features of these stocks. First one is the code that the company trades on the stock exchange. And this essentially is just an abbreviation of the company's name. In most cases, it also corresponds quite nicely as a bit of an acronym. So we can see here the National Australia Bank has the ASX code NAB. The next feature I want to focus on, guys, is the price, and this is basically the price per share. This table also provides you with an overview of the change in the price of the share, and that's usually compared to the price at the end of the previous trading day. The high and low column provides you with the price, the highest and lowest price in the most recent trading session. The volume tells you the number of shares that have traded hands, and of course the market cap, as well as the 1 year return. So basically the 1 year return tells you, as compared to 1 year ago, how much has the share appreciated in value or decreased in value. And you can see a lot of these shares have actually increased in value as compared to exactly or approximately a year ago. We can see here that Westpac is probably one of a handful that, compared to exactly or near exactly 1 year ago, is just slightly decreased in value. You can see some standouts here. We've got Fortescue Metals Group, which is basically increased about 160%, and that's largely due to the large increase in the iron ore price. Okay guys, I just wanted to show you a couple of stocks as an example. So I've clicked into a couple of these stocks. The first one that I've clicked into is the Commonwealth Bank. And we can see here that the most recent price of this stock is about $80. And compared to the previous price at the end of the previous trading day, it has appreciated about 0.25%, and over the last year it's appreciated by about 12%. Now this graph here shows you the price history for a share of the Commonwealth Bank, and you can play around with the different time horizons. So over the last day we can see how the share has traded. We can see that it's had a price high of about $80.20 at its highest point, and at one point in the day it was trading as low as $79.41. We can have a look at how the share has performed over the last 3 months, for example. We can see that there have been some dips as well as some peaks, and guys, in general with shares, they are influenced by changes in the economy and you know what's happening in politics, as well as you know what's happening generally in the world. Share prices are influenced by the economic and political and the social conditions in which these businesses operate, and that's primarily the reason why share prices move, is the outlook for the company changes as things in the economy, in politics, in you know how society is functioning and what's happening at the point in time, and how that influences the outlook for a company in terms of generating revenue. So we can see here, if we look at the 1 year graph for the Commonwealth Bank, it has traded in a bit of a range over the last 6 months. If we go here towards the beginning of 2019, we can see that it was trading at about $72.50. And as the years has gone on, the prices started to increase. I do know that at some point the findings of the Royal Commission were handed down, and this stock no doubt has traded based on some of the findings and the sentiment around that whole process. We can see here the peaks and troughs. Okay guys, I want to move down into this next section here, and let's talk about some of the information that you'll find here. So if we look at this section here, we can see that we've got some information on price, on the value of each share of CBA. So as we saw before, the last price was $80.09. We can also see that one share of the CBA has appreciated by about 0.25% as compared to the previous trading day. Approximately 750,000 shares of CBA stock have traded hands in this current trading session, and those shares have had a value of approximately $60 million. So quite a lot of trading that's happened over the last trading session. Over here we can see the previous close, which is basically the price at which the CBA traded at the end of the last trading session, which would have been the 31st of December 2019. And the day range is basically the range between which the CBA traded in the most recent trading session, which in this particular video, guys, is the 2nd of January 2020. We can see here that over the last 52 weeks, the stock is traded between about $70 and about $84. So it has traded in about a $14 range, guys. And if we look at the last year, we can see how that correlates. So it's the stock has moved, and we call that in finance, that is called volatility. And the rate of change of that, guys, is basically the is the variance between the high and low. We do have some 4-week figures here with the average volume of about 2.6 million shares that are traded hands at a value of about 214 million. Now I want to focus on some of these statistics here. So we can see here that the ASX size rank is number 1 out of about 2,302 companies. So what that tells you guys is that based on market capitalization, the Commonwealth Bank is the largest company on the ASX. Now, we talked about the ASX 200 being the largest 200 companies. The ASX as a whole actually has at least 10 times that number of companies on there. So there's about 2,300 companies that make up the ASX. We can see the performance of the CBA compared to itself a year ago. It has appreciated about 12.85%. Compared to the ASX 200, however, it has performed much lower. So the way I read this is compared to the ASX, which has performed 8 percentage points more than the CBA. So I'd read this as the ASX has actually returned about 20% over the last year, which is about 8% more than what the CBA has managed to return. So what that means is if you had invested in the ASX 200 as an index, that index would have performed 8% better than what the CBA has. And we also have a comparison of the CBA's performance as compared to the sector. Okay, guys, the next thing I want to focus on here is the number of shares that are on issue of the CBA. So this tells me that there are approximately 1.77 billion CBA shares on issue, which is quite a lot, but it is the largest company on the ASX. So there are a lot of shares on issue. And as a percentage of the All Ords, it makes up approximately 6.75%. Now, the All Ords is essentially another index. It's like the ASX 200, but it is actually a much smaller number of companies, and it's not necessarily based on the market cap of the companies inside. It basically is a basket of industrial companies. I won't go into further detail on that. We might leave that for another video. But what this tells me is that for that index, the CBA by market capitalization makes up approximately 6.75% of that stock, of that index, I should say. And down here, we've got the percentage of CBA stock, which is short sold. We can see here that approximately 0.7% of CBA stock is short sold. And basically, when you short sell a stock, guys, it means that you have an expectation that the value of that share or stock will be lower than it is today, right? And so people short sell because they believe that the value of a company will be lower than it is today. And what they do is that by short selling, they sell a share, they borrow a share from someone else, they sell that in the hopes that at some point in the future, they can buy that share back at a lower price and then they could pocket the difference. Now, it's a valid trading strategy, but I absolutely do not recommend you do that, guys, because it can be fraught with danger. All right, guys, if we focus on the fundamentals section here, this provides you with an idea of how the company is valued. Okay, one of the most often quoted ratios when you're dealing with comparing the valuations of different companies, the prices of different companies, is the PE ratio. And the PE ratio is basically the price to earnings ratio. So this tells you as a percentage of how much revenue per share the company earns, or earnings per share, what is the multiple or what is the premium that the market is currently paying for that particular company. So over here for the CBA has a PE ratio of 16.5 times. What that means is that the market is currently paying 16.5 times whatever the last 12 months worth of earnings are. And that's known as the trailing 12 months earnings. So we can see here that for each CBA share, right? So for each one of these 1.77 billion shares, the CBA earns or generates revenue of about $4.86. So if I owned one share of CBA, okay, there's about $4.85 that I have essentially got ownership of, right? Now, if I had to sell that share, someone in the market could potentially buy that for 16.5 times that value. And that's the PE ratio. The PE ratio is a very easy way to compare the premium that investors are willing to pay for any particular company in an economy, right? Now, 16.5 times is actually on the high side. Generally for large, stable companies, also known as blue chip companies, market participants or investors generally pay between 5 and 10 times earnings. But over here we can see that at this particular point, on the 2nd of January in 2020, the market is currently pricing the CBA at about 16.5 times earnings. Now, another reason for why an investor would pay 16.5 times earnings is that they might believe that a particular company has really good growth prospects, and so they're willing to pay a higher price with the expectation that at some point in the future, that company will either generate a lot higher earnings or potentially pay a higher dividend, right? And that's a good segue into this next figure here, which is the dividend yield. Now, the dividend yield is essentially the percentage of the price that is paid out as a dividend. The DPS is the dividend per share. So we can see here that based on historical data, the CBA has paid about $4.31 per share as a dividend. So guys, what does that tell you? Let's compare the dividend that's being paid out between the earnings. So the Commonwealth Bank, out of the $4.86 that the Commonwealth Bank has generated in revenue, it is paying out about $4.31, right? And as a percentage of the current share price, that's a dividend yield of about 4.4%. And that's actually quite high for a dividend paying stock. Australian companies are known for their very high dividend yields, especially those in say the top half of the ASX 100 or ASX 200. Now the caveat being the large stable companies which have got very consistent earnings do pay a large part of their earnings as dividends. And basically what that means is that the company doesn't use that money to reinvest into the business. They pay some of that out as a dividend because they don't believe that they can generate future growth by utilizing that money. Now, the other portion of that earnings is generally reinvested back into the business. Now, this value here, the gross dividend yield at about 7.7%, is basically the dividend yield, but it's exclusive of the tax that the Commonwealth Bank pays. So in Australia, the company tax rate is 30%. And what that means is any company that's registered as a company or a corporation has to pay 30% on all earnings once expenses are taken out. And that's based on a gross dividend per share of about $6.16. Going down, guys, we can see here that some background on the company. We can see that the Commonwealth Bank is Australia's leading provider of integrated financial services, providing retail, business and institutional banking, and so on. So this bit here just gives you an overview of the company and the business that it operates, and where it conducts its business, and what sort of activities it conducts in its day-to-day activity. We've got some information here about where the company's head office is, who the managing director is, what industry it belongs to, the date it was listed, and some of its competitors. And as we scroll down here, depending on the type of company and whether it pays a dividend, we can see the previous dividend history. So this table basically tells you the amount that was paid out as a dividend, when it was paid out, the amount of franking. And franking, guys, in Australia is basically a credit that an investor gets on their individual tax. So by offering 100% franking, what that tells you is that you're able to claim the amount that the company has paid on tax. 100% of the company has paid on tax, that's attributable to your shareholding. And if we scroll further down, guys, we can see the announcements, the historical announcements for each company. A lot of this I don't look at, simply because for large companies, it's just a repository of announcements. Now, guys, if we scroll down, we can see the announcements that the company has made to the market. And now, one of the requirements for being listed on the Australian Stock Exchange is that the company needs to make announcements to the market about anything that it believes will materially affect how people perceive the company, and whether it's price sensitive or not. And we can see here that the CBA has made a number of announcements in the last few weeks. Some about dividends, some about settlements that have occurred, conflicts with other legal conflicts and the outcomes of that. If we keep scrolling down, we can see what's called the broker consensus, which is basically for all of the brokers that cover this stock, what the consensus is. And we can see here that as of the 6th of December 2019, the consensus from the brokers that have covered this stock has been mainly a sell sentiment. Okay, and we can see how that's what constitutes that that sentiment. There's only one broker that had a buy target on this stock. 6 brokers have issued a hold, but 9 have said sell. So on balance, guys, the sentiment is a sell. Now, I wouldn't necessarily take that as a recommendation for you particularly. As I said before, always consult your licensed financial professional who will tailor advice to your particular situation. Right, there's some further information here about directors and management of the company, and some of the information on what transactions each one of those directors have made in the market. We can see here that there are a number of directors that have bought CBA shares on the market, and we can see here that, for example, the managing director was issued approximately $48,000 shares, at a value of about $3.8 million. That's generally part of some sort of short or long-term incentive plan. So this goes back to the requirements of the ASX to disclose, any transactions that are made by directors of the company, obviously because they do hold a lot of influence as to the day-to-day operations, as well as the strategic direction of the company, as part of general finance theory, and what's called the efficient market hypothesis. Basically states that any and all information that is relevant to the value of a company needs to be made available to the market, so the market can accurately value that asset on an exchange. And if we keep scrolling down, we can see the makeup of shareholders in the CBA, and we can see here that the top, say, 5 or 10 shareholders are usually large banks, and these banks hold them either for large institutional investors or as a pool. And we've got some further price history for the CBA.
Okay guys, I hope this video has been helpful for you. If you've got any questions, please feel free to leave a comment down in the comment section below. Subscribe to my channel and like this video if you got some value out of it. I am looking to do some further videos on investing in the stock market, and I will put some more information up on that in due course. But as I said, if you've got any questions, I'd be happy to answer them down in the comment section below. Okay guys, enjoy the rest of your day, and I'll see you in the next video.